Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek. We're lower in the grains, higher in the livestock futures. And Brad, let's talk about the cattle market here. We had strong weekly closes last week. We're up into contract highs here again in the futures and both live and feeder cattle futures. And I guess a lot of whether we keep going is going to be predicated on what cash trade does again this week. So what are your thoughts?
Well, thanks for having me on, Michelle. I get a kick out of this. Yeah, well, the market here, you and I have talked about how the nuance of the market changed here when the fund community became largely involved, and then we had a couple of black swan events, which seemed to take the wind out of the sails of this long speculator. And he really needed proof, right? He really needed to see that the cash market was indeed stronger before they dared to step in front of the futures market. Hence this big discount that we're trading. So I passed 184 Friday, and we're sitting here with August cattle at 168, and we're wondering if they're too low, too high. I mean, I'm sorry. Obviously, the market's the lowest common denominator is what the futures should, converge with here at the end of June, and that's of course going to be the South. And even they though are at 171. So strong cash. Better than expected, because what the market setup was, okay, cash is going to break $2, $3 a week. We're going to do that all of May. We're going to do that all of June, and that's why you can justify the fact that June is a steep discount. Well, when that pattern changed, particularly last week, when we not only were we not lower, we were actually higher. I think that changed everything, and I think we also should be mentioning the pickup time. I think that that is also a significant part of the market, Michelle.
Slaughter for the week would also indicate that we're starting to get into the tighter numbers again, too, right?
625. It's the latest slaughter we had for the week last week in a while. Hey, I'm an old timer here, so we got a short for a long. We got a 4-day buy for a 5-day kill week. That's usually positive as well. So year to date, just for those of you that are scoring at home, we are down 3.2% on slaughter year to date, which is almost right on the dot of what these cattle and feed guesses have been saying, that we were going to be down about 3%. So as we move into the summer, we'll have a seasonal increase in the supply of cattle, always do. And there's plenty of cattle in August. But for the here and now, we've got cattle pulled forward, and the market continues to underestimate just how tight things are here up in my part of the country, the north.
How about meat clearance over the holiday? How good was that?
First blush, it's a little quick maybe, but the first blush was that it was very, very good, particularly on the East Coast, where they had what's been called a 9 out of 10 weather, where a very, very mild, beautiful weather got people out, got the grills going, etc. So, boxes back well above 300 here again. I know that there's demand bears out there. Right now, I don't see any evidence that anything's happening just yet, but the clock is ticking. This is, on average, this would be your high week for the boxes. Or right about in this window. It's also the low week on weights, right in this window of time. Mm-hmm. So don't be surprised if we start to see some shift. It's normal seasonal stuff.
And let's also talk about what's going on with the feeder market. We've had rain in some of the central and southern plains feedlot areas, almost too much in some places, where we're hearing of some death losses. What do you know?
Well, I'm certain if you're in Hereford, Texas, that you've got it's a nightmare. 9 to 11 inches of rain is way too much at one time. There's even, I talked to one feed yard that is estimating that they lost 4,000 cattle. They literally drowned. And I think there's a lot more than that. So now I'm not saying that the death loss of those cattle is necessarily a market factor, but the fact that it is finally raining in some of those areas that have been so dry, to me, I find that I do better when I start thinking about what I think the market ought to be in 3 months or 6 months or even a year. But to me, you're starting to get more and more indication that the weather is changing enough that we should be looking at heifer retention here this summer and fall, which of course changes the supply here, particularly in the first quarter of next year. So let's keep an eye on that moisture situation. The north is much, much better. Anybody that travels out toward the mountains in the Dakotas, Montana, would tell me that things look much, much better there. So I'm short-term bullish and I'm long-term bullish. It's the middle of the market here in the summertime that I have a little concern about.
Yeah. So we should also talk about the debt ceiling talks. It looks like we have a deal, at least, between the president and McCarthy. And so that seems to be calming some of the fears here, the jitters in this market too, right?
Absolutely. The cattle market hates uncertainty, and uncertainty is bearish cattle. It just is. It puts this long speculator on the sidelines. There's probably a little twist there too. I know there were some, I was really never in that camp, that felt that if the debt ceiling remained unresolved, that might be bullish grains because there might be a flight to hard commodities. That was never I guess I never saw it that way, but that might be contributing a little bit to the problem over there. But I think the real problem with the grains, of course, is the fact that the weather's a little wetter today than what we went home with on Friday afternoon.
Yeah. The commitment to traders report, though, open interest, not necessarily indicating that there was I guess that the funds were scared of being in the market or not.
No, you're right. It's curious to me. And maybe, some of these funds, Michelle, you got to remember this is an algorithm built into a computer. It doesn't maybe have the same emotion about weather markets that would have been, say, 10 years ago. I suppose you look at the corn, it failed at the 40-day Friday, it failed at the 40-day moving average again today. That's
Right.
one of the very first things a lot of those funds look at. I too was a little bit surprised though that they're willing to have that big of a commitment, because if we'd have come in here this morning and it was hot and dry, we'd have found out where the bear goes to the bathroom in the woods then, if we'd have chased these funds. So that's still something that's curious to me. I would also mention the fund position here in the August cattle, open interest above 150,000. That's about as big as it gets. I'm not going to pretend that I can predict when the funds are going to do something, but you're getting to the point where the yellow light should be blinking a little bit, that, be a little cautious. And that's all I'll be, because in the near term, it feels like cash is still king.
So speaking of the funds, they actually increased their net short position in the hogs last week. And so this bounce that we're seeing today, is it just short covering and corrective in nature or what?
It's a miracle is what it is. I don't know. I tell you what, for these guys that are still engaged in the hog business, and there's very few of you independents left out there, and I'm proud of you. It has been a ride. This reminds me of the old days when we had pork bellies, where the horse would get a bit in his mouth and just go, and it didn't make sense. And then that's, to me, we got so steeply discounted to cash. Today's a day that actually makes some sense to me, that we should be, trying to put a little summer premium in. This is not a big price for summer hogs, my goodness. The relative comparison value between cattle and hogs, of course, something you could bring up as well. But I think this is pure short covering. I'm anxious to see the open interest, when we come back here tomorrow morning. I would guess that's what it is, but by golly, we're $4 higher. We haven't had one of those days since the Dead Sea was still sick,
Yeah, I'm with you on that. What about the corn market? You mentioned failing at the 40-day moving average, but we've still got the July kind of holding that $6 mark. You still have the inverted market working there, even though we look like we're trying to maybe remove a little weather premium here, huh?
I'm a little surprised, even, Michelle, how easy we go down from these levels. I mean, levels that year-on-year comparatives obviously are much, much less. Your July relationship is, I think, worth noting. I think on your program I've talked about it, how if you look at 2013 as if that's an analog year, 12 was a drought, then 13 we planted a lot of acres, which is exactly what we're doing right now, right? Last year was a drought. We planted 92 million acres. The government thinks, notwithstanding North Dakota, I get it, and not having a lot of confidence that they'll figure those acres out very quickly either, citing the 2019 market. But that time the spread went nuts, where the July corn stayed pretty strong because of the tight old crop supplies, because of basis, which here is actually stronger than it's been the whole season. It actually increased again last week here in this neck of the woods. So it could be very well that the July holds together here, in spite of the fact that December seems like it wants to go lower. I know last time I checked, you can't raise a crop yet in May. There'll be some stuff that will still probably put some threats into the marketplace. But it just seems to me like after the demand destruction that you've had, and now this potential of big supply coming at the market, I don't hang around here, guys. I mean, hopefully you've got a good start already, but I don't. It's the Corn Belt. It usually rains. I'm sorry, and I don't know if it's going to rain, and you don't either. But I'm a very easy seller on rallies or buying puts or doing something here. To me, the market feels vulnerable and it goes down way too easy.
Yeah, do you feel that way on soybeans? It looks like not only are we removing weather premium, but also the products are down hard. And I have to feel like that's because China's been buying from Brazil and we just don't have the demand that we had.
Amen. The soybean meal, start there. That's a problem. and I'm more bearish beans than I am corn. This recovery, big deal. We rallied 50 cents on December corn, and we rallied 20 on November beans or something like that. And this is new lows for the move. I whatever. I'm empathetic. I'm a farmer. My son farms. Okay. But, you cannot sit there on those high prices like that and expect that it's all rainbows and lollipops. I'm afraid if we raise a crop this year, we'll find out we'll go back to the old norm that you can raise enough in 1 year to create an oversupply. So again, it's only May. Be dialed in. We'll get some scares, but pretty heavy action here today.
All right. Thanks for joining us, Brad Kooima with Kooima Varilek. That's Markets Now.